Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. You have the Dow down 84, NASDAQ off 29, S&P's off 14, gold contract down $10.20, trading at $1,229 an ounce. That's not good, folks. You broke lows out here. Silver down 19 cents at $18.58 an ounce. Platinum off $3 at $1,366 an ounce. Copper flat at $3.10 a pound. Light sweet crude down 72 cents, trading at $92.11 a barrel. Bonds, you have the 10-year off 16 ticks at 123.31. The 30-year is off a point and a half at 135.27. King dollar down 49 ticks at 84.25. The euro is up 24 at 129, and the yen is up 24, trading at 107.35. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. Cash S&P, we're down 15 bucks. You've taken out the lows that have been established, the last week, teetering at the highs. As soon as you get back inside the 1891, which we're 10 points inside it, what does that set up? That sets up the low of 1904. Volume-wise, this is what you have. Still light volume. We'll see what they throw into this. This is going to be interesting, though. They're going to throw volume into this. So right now we're at 411 million. We did 601 on Monday, 602 Tuesday, 607 Wednesday, and 604 Thursday. What you'll see out here today, this is going to bang in about 750, folks. So you get the correlation that you sell down, volume expands again. Volume is expanding right now in the SPY. We've done 77 million shares thus far. It's breaking the swing point of 198.77. We hit 198.56, and that correlation there, that swing point, get 88 million. We'd have 77 million. I suspect we're going to do that 88 million. The close in the SPY under 199.06 sets up also the SPY down to the 190 area. NASDAQ composite. We take a look at the composite. What do we have with the composite? Composite down 28 bucks. That's no big deal. Really, that's just about flat, really. It's down 28 bucks. They're selling it off. Volume-wise, what you have is this. Volume is going to explode to the downside on the composite. So that's important. That's subtle, but right now at 1.3, I suspect that's going to come in about 1.9. We take a look at the NDX 100, the 3 Qs. What you have with the 3 Qs, that is backing down with 23 million shares. That's no big deal either. We'll see whether they throw 30 million into it. Apple coming into the close for the weekly is going to be a big number. Why? Apple right now is up 38 cents. And the benchmark, that's what we're talking about. Because if Apple can close over the benchmark, it can trade higher. You close under 100.72, which it looks like it's going to close over that level. Bottom line is that even with the volume, that means that Apple can move up to higher price. Gold contract. Let's go take a look at gold. So what do we have with gold? Gold broke into its low, spiked the low. Now, it has lighter volume, but the bottom line is that you spiked the 1241 area. And if we take a look at this, is that once you spike that area, what that is going to set up, if we take a continuous contract, we bring this back, what that sets up is that you have your swing low at 1181. That is game right now. And you have the ultimate swing low of that 1179. That is game. That's how this is set up right now. We'll see 1218 has a little support, but bottom line is that that's where that's shaking at this particular point. We take a look at the GLD, which trades at 10% of the price of gold. The number there that this has to hold, which it's not holding, is the 120 area, 120.77. We're at 118.12 right now, and what that sets up on the GLD is that, yeah, you can get down to the 114 area. What we have done is that you broke the swing low of May 30th, and it looks like we're going to break that with volume. Yeah, we're definitely going to break that with volume. So what that sets up the test of the test, which is December 20th. The week is December 20th. That is big volume. That's 68 million shares. Bottom line, you're coming into that with lighter volume, but it is going to go test those areas. Now, bonds. Let's go check out bonds. Okay, so what is intriguing about the bond market right now, which I brought up the last couple of days, is this. No matter which way bonds go at this point, folks, the market doesn't like it. And that's unique. It's unique in that aspect. There's no doubt about that. Right now, you have bonds going south. 1.3 million shares, contracts rather. So that's some juice behind the move. The 10 years at 123.31. What that sets up is that sets up a test of 123.12. 123.12 is where on the 31st of July we rejected that lower level. That wants to get tested. The yield on the 10-year right now is at 2.611. You take a look at the 30-year, which we have with the 30-year. 30 years down 400,000 contracts, which is big numbers. We are at 135.28, and that test is going to be down to 134.31, which is 134.30. That's 135. So that's 28 ticks lower that the bond market can get into. And what I mean by that, the aspect as to where the bonds go. Well, check it out. So bonds are going down right now, meaning down in price, up on yield. Market doesn't dig it. Well, guess what? The market doesn't dig bonds going down, up on price, down on yield also, because the market's trying to figure out what the heck is going on, and cash is going into that market. So that'll get straightened out in the next few weeks, but right now there's a disconnect in between that market that it heads you in, tails you in, if you are basically thinking that the market's going to go south. King dollar. What do we have with King dollar? King dollar's taking a break. So if we take a look at King dollar out here, DXU, what you have with King dollar is that you had that spike high, big volume yesterday and short volume today. So inside that context, what you have is this. Inside that context, that is saying that the dollar is going to take a rest. Gold should be able to spike out of here. If we take a look at some of the gold equities, the XAU, the HUI, they're basically in decent shape for the context of gold, physical gold getting hit. Why? XAU is only down 167. We're at 91.33. The low of yesterday is 91.12. HUI, the gold bugs index, that is at 218. The low of yesterday was out here at 217. So the bottom line is that they can't get the actual gold physical equities or silver equities down into lower price. The XLE, you take a look at the XLE. XLE down $1.38 here. We've put this on a weekly basis, and what you're going to see on a weekly basis is that we're taking out that swing point. Swing point we're talking about is 94.49. You're at 93.62 right now. It's not going to have the 65 million. Thus far, we've done 52, but it can't hold the price. This XLE, folks, can get down to 84 bucks. So that is a big number. Inside the XLE, you get ExxonMobil is the largest weighting structure inside that. ExxonMobil is down $1.09 right now. That's been a one-way shot on the way down. ExxonMobil, the B point on ExxonMobil is 97.63. It's 56 million shares, and it looks like it won't have the volume also. This will be much closer. We're going to do over 50 million shares, ExxonMobil, but ExxonMobil also wants to run down to 92.31, and right now you're at 95.93. We go over to the financials. We take a look at the XLF. Inside the XLF, this is what we have, XLF. XLF couldn't hold higher price out here today. Flat market, actually, not saying much. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now down 72. Nasdaq's off 26. S&Ps are off 13. We're going to be right back, folks.
Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, you get the American Express down to 74 cents. Exxon's off $1.10. We get Big Blue down 49 cents. McDonald's is up 56 cents. You get Sprint up 49. And inside the IBB, folks, which is important for the NASDAQ 100 and the NASDAQ Composite in general, that little baby is starting to come down with some juice once again. It's not that big percentage down, but you're down $4 right now. You're doing 595,000 shares, and 265 is what it wants to go after. And I suspect that 265 is going to be next week. That's when it wants to go after it. Gilead Science, which came down last on this 5th of September, that's when it came down 10 bucks. We went from 106 to 97 with monster volume. It's going after that right now. You're at 103.48. That high volume spike, that wasn't that was a monster getting out of that. It looks like they're laying into the stock once again. And I don't expect we'll get down there today, but that's where it's going. That break, by the way, sets up Gilead to get down to 92 bucks. Inside the IBB, when you take a look at that structure, which is important about the IBB, number one, is that the IBB is what brought the NASDAQ down so quick coming into the February lows. Gilead is 9.3%, Celgene's 8.5%, Amgen's 8.5%, Biogen's 7.3%. AMGN, we take a look at Amgen for a second, and what you're going to see, Amgen's not bad, only down $1.38. CELG, that baby is set up, that's down 75 cents. What you are going to see with CELG is that we're at 91.21. You get back inside 90.50, then you're going to see some action to the downside. So coming into this close out here today, the real key is going to be what we are going to see is that we're going to see an expansion of volume. The S&P itself, if we take a look at the future, there she is. We'll take a look at the futures. The E-minis, what you have with the E-minis is this. Intraday, okay, what we've done thus far is that we've gone from 1999 to 1979. So it's a big day inside the S&Ps. That's 20 points, folks. That's a big number. You broke through the 1985, and if you remember, the larger structure, as soon as you broke that 1985 again, what that sets up is a 1980. Yeah, that's heavy. It actually sets up. Okay, so the high out here was the 2000. Yeah, trading range is 1985 at the bottom. When you break that, which we did, and you broke it with some decent conviction, and at 1320 today. When that happens, what you get is that's going to be 1970. That's a 1970 future S&P coming at us. That's how that is lined up right now. So we'll see how this takes shape as we come into the close out here today. But that's how that baby is set up. Inside, let's go to the silver market for a second. We take a look at silver. So inside the silver market, what we have, and this is so intriguing because silver was much weaker than gold. Then silver, basically, percentage-wise, is probably the same, but it's much closer to 1870. We're at 1860 right now. 1870 is where it basically broke yesterday, and that is the swing point. Then gold is, because what happens inside the gold market, what you have is that it's probably the same percentage, but it just perceptually it seems much further. Yeah, no, we're much further away from it. Well, actually, we're $42 is the number. So that means we're $13 away from it inside the silver market. Oh, this is really weird. Let me pull this, which is about 10%. And we're 10 cents away from it. Yeah, so, yeah, see, we're only 5% away from where the swing point is in the silver market. We're 10% away from it inside the gold market. As I said a little bit earlier, though, is that the gold and silver equities are basically holding, and they're holding pretty good. If we go take a look at American Express, what you have with American Express right now is that she's got an expansion of volume, and this is very subtle too. On Tuesday you came down to 87.75. You did 4 million shares. Right now you're breaking that level at 3.3 million. What it's trying to do is going after this low swing point out here, high volume swing at this 85.75 area. And how we come into that, and that's going to be next week, is absolutely going to be crucial. Because thus far, what you do have with American Express is that American Express is trading where it was in December of 2013. 13. Now, that's important in the context that, okay, we've gone sideways. You know, we're dealing with September. You're dealing with 9 months into the year. And with American Express, you had that high-volume spike on the way down from 92 to 85 the week of August 1st. When you get volume that comes off the highs, it's like, okay, we're getting a larger retracement. And that large retracement from American Express says it can get down to $78. $78 from here is a decent number on the way down. Inside the NDX 100, let's just see what's holding the NDX 100 up today. Yahoo is up $4. Look at Yahoo. This Alibaba Yahoo deal, folks, is a big number. Yeah, see, Yahoo is an ABC structure on the way up. It's a big one, too. This Alibaba deal, I believe, like, okay, so, yeah, the Alibaba deal is going to go public next week. That's the bottom line. And guess what? Yahoo is a monster ABC up. Conservatively, 23, 33, 43. It's $18. C point, 32, 42, 52. It's a $50, man. $50. That's where Yahoo's going. And it's got the juice. It's got the wide price spread, accelerated volume, all of the above. And Alibaba, thus far, folks, okay, when they do road shows, the bottom line is that they're doing road shows. They look to push as much stock as they can get out. Well, what happened with Alibaba, so check this out. For Alibaba Holding Group, not every prospective investor is created equal. After a week of investor meetings, the Chinese e-commerce giant has received enough interest in its public offering that it will stop taking orders for the sale early. People with knowledge matter. People with knowledge of the matter said. Before Alibaba advisors can decide whether they will boost the size of the IPO above a $21.1 billion target, they need to take a close look at where the orders are coming from. The bids are still not binding, and small funds looking for a quick profit turn know they won't get everything they ask for. As a result, they often inflate their demand. They always inflate the demand, folks, okay? Bottom line is that they're going to get a huge amount of demand. I mean, you got a market that is at highs. You got a public relations push on Alibaba that's amazing. You got every broker-dealer pushing it, every bank pushing it. Bottom line, they're going to get this out. With our man, Mr. David White, the next hour, I'm sure that David had sent me a chart earlier. I don't know if he's going to have it up, but we'll have him get it up. Because David has talked many times about sliver deals. And Alibaba is a sliver deal. And what a sliver deal is, folks, is that it's all about supply and demand. You make a small supply available, and that's it. Because the demand is extraordinary. What does that do? That prices it up, baby, in a big way. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back. Dow Industrials right now down 71. Nasdaq's off 26. S&Ps are off 13. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, you get the Dow Industrials down 65, NASDAQ off 24, S&P's off 11.5. And as you just heard that promotion, folks, for the Tiger Real Estate Opportunity Fund, the first mortgage program, if you come over to our website at TFNN over the weekend, you're going to see under breaking news, I did a 6-minute video just to give you an idea of how this program works. If you're in the CD market or you have extra cash around that you do not need for 4 years, it's a great program in the context that you get monthly income. It's a secured investment. The security of the investment is that we got these third-party appraised. We're looking to borrow 70% of the appraised value. And if you go over and you just go through that 6-minute video, you'll see, number one, a couple of the places that we have. We have a lot more than that. You can see a couple of them. You'll see the expense ratio, that's the exact actual expense ratio on it. You'll see the cash flow on them, and you'll see the actual documents that you would receive if you decide to be a lender. And what that's all about, by the way, which is really cool, and this is what the Internet gets to do on a continual basis, and distribution gets to do on a continual basis. You're just cutting out the middleman. You're going from the fund to the investor, and instead of putting your money basically in the bank or in a CD, getting 0 interest or 1% interest on a short-term basis, you get 4% interest. It's a 4-year deal. So what that specifically means is that you're tying your money up for 4 years. You're guaranteed the 5% for 18 months. So what that means is that, let's say that we have a unit and someone, let's say that the units go up in price 30% or something. And someone comes in and says, okay, Tom, I want to buy this unit 6 months from now. I don't expect that to happen because we get nice long-term leases on them. But the fact of the matter, if it does and the prices go up that dramatically, what would end up happening is that you would get your 18 months interest even though we sold the property. That's what the guarantee is inside of that. And what that's all about is that if you are moving money from one investment to another, we felt that we had to put that there on a short-term basis so that you could be secure in the aspect that if you are moving money around, you are going to get a certain amount of interest for a certain amount of time for that risk that you're taking. Our phone number is 877-927-6648. We'll take a look at this volume characteristic right now. So on the NYSE, yeah, you're at 450. So it's gonna run in at about 750. So the real keys now are going to be are you pushing down or pushing up. Thus far, the Dow Industrials were pushing down. Inside the Dow Industrials out here, the weakness versus the strength. We have Verizon is the weakest stock right now inside the Dow Industrials. That's down 63 cents. You got Coca-Cola off 52. Intel's down 43. ExxonMobil is down $1.13. Exxon's going to be a drag on the Dow Industrials for quite a while. Putting juice into it, on the upside, you get Goldman Sachs is up $1.96. McDonald's is up 49 cents. Now, McDonald's is a dead cat bounce. That McDonald's has been going down straight for 3.5 months. It is a high volume low. You got a dead cat bounce going. It will test that high volume low. JP Morgan Chase is up 32 cents, and you get Johnson & Johnson up 23 cents. If we do go over to Verizon, let's just go see what Verizon looks like. So it's not a bad-looking stock. That's interesting. So Verizon's down 63 cents. We put this on a, yeah, she's still on a consolidation. It's going to be hard to break Verizon down underneath 45.38. That's the way this is set up right now. Let's put this on a monthly basis for 10 years and see what it looks like. So on a monthly basis for 10 years, check this out, 48.34 is going to be hard to break down. Right here, now you're at 48.37. So Verizon is pumping out, this gets interesting, Verizon's pumping out a 4.5% dividend. That's pretty intense, no doubt about it. Let's go look at Ma Bell. Ma Bell was paying a 5.3% dividend. These companies are throwing off some cash, there's no doubt. We've put this on a longer-term base. Now, check this out. There's a huge difference. I wonder what this is on a fundamental basis between Verizon and Ma Bell. Ma Bell is at 34 bucks and looks like it wants to go to 29. And yeah, it's a huge differential here. Absolutely huge. You know, Verizon looks like pull up Verizon again. They really got something going, whatever they have going here. If I pull up Verizon again, put this on a 20-year, yeah, Verizon's got something going. Verizon, the highs of 1999 was 62 bucks. You're at 48 right now, and that little baby has been building cars for approximately 16 months to basically get into higher price. Now, that contraction, consolidation, I expect is still going to, be there. But the bottom line is that there's no doubt that Verizon is much stronger than Ma Bell. And one of our targets that I appreciate it, Mark, is saying AT&T is under review for a credit downgrade, and that may bring their borrowing costs up slightly. Yeah. And then the next target saying, I know my Verizon bill is outrageous. You know what's interesting is that I have Sprint in my phones, which I've had for a long time, which I love, by the way. But on the cards, we use a card, so I always have an Instant card with me, and it is a Verizon. It's not that expensive as long as you don't use a huge amount of data. But their system themselves, meaning where you can get connection from, and Verizon is outstanding. There's no doubt about that. Some of the high-volume stocks in a low-volume market out here. We have eBay is, look at that, eBay is up $1.41. You got eBay up, Facebook's down 46 cents. Twitter is off 46. Alcoa is down 20. Transocean, oh, that's getting whacked. Let's go over and take a look at you got Transocean, oh, that's rig. Transocean is down $1.47 right now at 35.90. This thing is getting toasted. Oh, look at this, another ABC down. Whoa, baby, there's no mercy on this. So $46 to $35. We put this back. This is actually going from 60 to 35. Oh, this is big problems for Transocean, man. This is a personality stock, too. So Transocean has broken out all its bottoms. That sets up, holy cow. Man, what's happened with the rig business? The rig business is toast again, folks. 38, yep. Oh, my God, this is amazing. This sets up 26 bucks on Transocean. Transocean, the high in 2008 was 163. It goes down to 41, does a bounce up to 90, comes back down to 41 again. If you want to see high-volume lows, folks, bottom line, you got the high-volume lows in this. Does another counter-trend bounce up to 85, works its way down, takes out the low, and it looks like 154, 71 million. Thus far, it looks like it's going to take out the high-volume low with high volume. Right now, we're dealing with, September 12th. You get 21 trading days that average in a month. We're about halfway through the month. And bottom line, you get halfway through the volume right now. So that's not a good indication that good old Transocean is going to do anything. And, of course, there's a lot of different things that are involved there. I don't know if they're involved in the Arctic with Exxon for Russia, or it just has to do with shale oil and the aspect of how shale oil itself is basically taking out the deep drillers. If we go into the oil market itself, flat market out here today, down 92. We're at $92.18. But what you had with oil is this. Oil broke its swing point, broke it with volume. You got an ABC structure down to 85 bucks. And on a weekly basis, that's going to be set up on a weekly basis because I don't expect we're going to see oil get over this 92.50 area. Well, we could. We're at 92.16. 92.15, 92.50. It'd have to get over that area in order to basically not have the ABC structure on the way down hold on price. So that in itself is a big number. If we go look at the IYR, this is the real estate index. This is the commercial real estate index, okay? Inside of this, I believe this is the commercial one. Let's just see. Yeah, this is commercial. This is Simon Property, American Tower, Castle, Crown Castle, Public Storage, Equity, Prologix. This closed. No, this is not closed. This is $71. Oh, look at this. So this has to do with rates, too. This is getting toasted. Oh, boy, look at this. Don't touch this thing. So, oh, this is a classic, too. Look at this. This came all the way up to the 2013 level. It had come off that level with 68 million shares, and last month you went up there with 38. Last week, 38 million. Now you're giving it up with volume. This is in trouble. This is going back to $67, and right now you're at $71.60. Stay right there, folks. Coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow right now down 64, NASDAQ off 24, S&Ps are off 11.5. Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, how you doing? This is a guy looking to get into UGAS. I've already actually got some shares, and I'm feeling that it's a real lively stock, and I'm having trouble finding an entry point. You got any suggestions?
Let's take a look. So, UGAZ, folks, is the velocity 3 times leveraged natural gas play. So, in that context, first we're just going to go over to natural gas, because with natural gas today basically rejected lower price, had lighter volume. This is in the futures market, okay? And if we pull this up, what you're going to see is that natural gas has been basing out at this 374 level. We spiked higher on the 9th and got to $4. That was with 175,000 contracts. Yesterday, you come down with 150. Today, we got to a lower low, rejected that price with 93 inside the range. So that what that sets up, Jay, is that it wants to run to 410.
Yeah.
Okay. So now we go back to UGAZ, and that setup. That means that this is it right here.
Yeah.
This is it, and you'd put the stop under this 1323 or 1380, and you're gunning for 1677 right off the bat, man. So.
Yeah, it's a bit of a rocket ship.
Well, it is, but you know how these things go, man. Just don't stay in it forever. These leveraged products are great if you get the trend right.
Yeah. What do you think is a good maximum amount of time to stay in so that the erosion doesn't really damage you?
Now, what you have happening here is kind of cool. Is this when they get to be like this is 1387, but when you get to be 12 and even lower, because they get defensive when they're going down, and they compound when they're going up. As they're getting defensive on a small number, you don't get whacked as hard.
Yeah.
Which is important, So there's not really like a number of days that have to do with it. What has to do with it, like you never want to be in a double or a triple, folks, if it's trading at 22 and above, and in a long period of time. Because the reason on both sides you can lose a fortune, okay? There's less loss at a smaller number. That's what it comes down to on the way down. And what you'll notice is that the first couple times that it moves up, it doesn't move up as much because it's compounding whatever that number is. So a larger number compounds quicker than a smaller number.
Yeah.
And the basis of where it's at, I'd take a shot right here and give it 2 or 3 days and that's it. What should happen with gas right now is this: gas should move Monday, Tuesday, Wednesday. And the reason I'm saying is that what you have with the contract is that a rejected lower price has lighter volume. So when you're at a swing point and you do that, you either move or you don't. And if you don't move, guess what? Get out, man, because it should move.
Yeah. It's giving me that feeling, that tingling in the palm where I'm failing. It's ready to leave the launch pad.
Well, I like putting trades on right at the swings, and that's what you have, because you're going to know whether you're right immediately. If you're wrong, you're going to know you're wrong immediately, okay?
Yeah.
The bottom line is that with natural gas, you're at 385. If natural gas closes under 376, which is 9 pennies away, right, just close the position.
Yeah, my first loss is my best loss.
Oh, man, that's so hard to do.
It is.
It is hard to do, but it's a fact.
It is. All righty.
Okay, man. Have a great one. Hey, what's the weather like in Boston? Is it nice out?
It is absolutely gorgeous.
Yeah,
everywhere.
This is a beautiful time of year up there, man. No doubt.
Oh, it's one of those blue skies you can see forever.
Yeah, totally.
Fire and cool, crisp, great sleeping weather.
Perfect, man. I love it.
Somewhere like this, I'm moving there. It's always like this.
I like it. I know, man. Have a great one. Have a safe one.
Thank you.
Let's go to Dave in Hope Sound, Florida. Hey, Dave, what's going on?
Hey, how you doing?
I'm doing great. You having a good day out there?
Excellent, thanks.
Cool, man.
I got a real straightforward question for you.
Yeah.
I have a fairly large TZA position. After the IWM closed over 116.39 yesterday, I put on a small hedge, like a 12 or 13% TNA hedge position, which always guarantees that it'll go my way whenever I hedge.
Yeah.
Would you close that out this afternoon or hold the hedge till Monday?
I'd hold the hedge.
Okay.
Yeah, and this is why. We have volume going and all that, right? But if I go to the IWM, so you're net shot, right?
Yes.
Okay, so in your net shot, folks, okay, and we have the IWM coming down, okay, 30 million, but it didn't break, the swing point of Wednesday. So it's like this IWM, there's going to be one little other, this can bounce to like 116.50.
Okay,
so
that's what I was saying.
Yeah,
yes.
I'd hold it till Monday, man. It's more important to do your money management at this point going over the weekend than, that's where I'd take that out, man.
That's a great answer. Thank you.
Okay, man. Have a great one, man. Have a safe one. And as we come into this close out here, folks, what you're going to see is that if we go, here, I tell you, in one of them, there's a double combination here. The first combo is that you got Apple that's going to close over its swing point. So that's saying even with lighter volume, Apple wants to go higher. And the second one, of course, is what? Is Alibaba. Alibaba, folks, is going to go public next week. And you know what? Guess what? They're going to push this market. They're going to do anything and everything they can do to hold this market up. It doesn't mean it has to go to new highs, but they're going to hold this thing straight so they can get Alibaba out, so you can flip Alibaba. And what that means specifically is that no matter how many shares you get, if you get 500,000, 2,000, all the underwriters, of course, are going to say that, hey, they don't want you to flip it. Alibaba is going to be flipped so fast and furious out here, it's going to be amazing. And no matter what price I suspect it's going to go out at, right now they think $60 to $66. I expect the greed inside the market. What you're going to see is, it's BABA. I believe it's going to be New York Stock Exchange, so let's just see. BABA. It doesn't say right here. They got it set up already. But anyway, the greed factor, I expect, folks, will get it over $66 on the IPO. No, I mean, they're going to sell it. The banks are going to turn around and up the price before the fact. So I suspect we're going to see probably more than $66. There's plenty of the idea that, leave something on the table. Guess what? That's all propaganda, folks. They don't want anything left on the table. The only thing they want left on the table are crumbs to basically push off the table after the fact and have people scramble on them. They want to get as much in as they can get in, as fast as they can get in. Particularly, they get the sliver deal down pat on this one. And there's no doubt that when you're talking about Jack Ma, he is going to, you got to remember something. He already had this thing IPO'd, got it at the highs last time, bought all the stock back, and this is his second time around. This is like an extraordinary track record. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back with our man, Mr. David White, our technology expert at TFNN. Dow Industrials right now down 63. Nasdaq's off 24. S&Ps are off 11.5. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Let's take a look at one of belief cards. This is by Richard Bach. To bring anything into your life, imagine that it is there already. Perception, folks, is totally where it's at. It's pretty amazing, actually. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 61, NASDAQ off 24, S&Ps off 11.5. Gold contract down 860, traded at 1,230 an ounce. Now, let's start with the gold market out here today. So, what do we have with gold? Gold breaks the bottom. Out. Light volume, but bottom line, you broke down. As soon as it broke the 1241.70 mark, we're at 1230. What does it set up? Well, when you take a continuous contract, what you're going to see is this. Now, the cool thing about this, folks, okay, is that you're close to a bottom. That's physical gold versus now the gold equities. The gold equities didn't break their lows from yesterday. Physical gold right now, you got into the bottom. What is that setting up right now? What that's setting up, we're at 1229. That is setting up a 1218, to 1181. That's the bottom line. Wants to get down there. You broke that swing point of 1241, so your next level down there is low. And that next level, by the way, January of 2014, we hit a low of 1181. That was testing the 1179 from June of last year. In both cases, it'll need a huge amount of volume to break that down. So bottom line, if you are interested in that metal market, this is where you want to be looking at it on a big basis. XAU and the HUI, what you have with the XAU and the HUI, they were down, but yet they didn't break the lows that were established out here yesterday. The XAU right now is at $91.66. And what we're coming into, we haven't even got to the bottom of the sign of strength. It started at $86.42. That was the week of the 13th of June. We look at the Gold Bugs Index, the HUI, same type of setup in the Gold Bugs Index. Couldn't break the low of yesterday. You take this and you put this on a weekly basis. There she is. What you're going to see on the weekly basis is that where the sign of strength was established was 207.63. Right now we're at 218. And 218 is saying that, yeah, you're going to go further into the bar. Bond market. So check out what bonds. We have the 10-year right now at 2.6. We're at 2.435 at the beginning of this week. So we take a look at that 10-year. What you have with the 10-year is this. She backs down today a full half a point, 16 ticks, 1.5 million contracts traded. What that sets up is that you get a 123.12 level, and right now we're at 124. If we take a look at the TLT, so you can see the correlation inside that, this is the 20-plus bond fund. We're at 113, and that is still coming into a swing point, and guess what? It is coming in with lighter volume. We did 11 million shares versus 14 million on the daily, and you take a look at this on a weekly, and what you have on the weekly, we just came down with 43 million shares, and you're coming into 57 million. The low that we're talking about at this point, too, is 113.05. So I do expect you're going to get into the 113.05, but it's going to be really hard to break down the 110 level, in this baby. And, we'll see how that shakes out next week. The 30-year bond, that was off a 1.5. We take a look at the 30-year. What we have with the 30-year, did 429,000 contracts. We're at 135.31. It's 134.31. So that can go down a whole nother, is it 134? Yeah, 134.31. That can get down another point. The amazing part, as I said last hour, folks, is that it looks like no matter which way the bonds go, the market's not going to like it. Bonds going down like this, rates going up. Market doesn't dig it. Bonds going up on price, rates going down, market gets nervous, like what the heck's going on that our rates are so low. King dollar. King dollar looks like it's going to take a rest right now. Now, this is what you want to watch real closely inside the correlation of King dollar versus gold. Why? Because King dollar has gone nonstop from 79.83 up to this 84.69, 84.52 level. And the price point on the continuous contract is 84.89. You're all of about 200 or 300 ticks away from it. I suspect that King dollar is going to take a rest here. As King dollar takes a rest, what that would do is give a little relief to all the commodities, especially, it would be all the commodities. The metal market would get relief also. Some of the high-volume stocks in a low-volume market out here, this is what we had. You had Yahoo. Yahoo's an ABC up. Yahoo, the Alibaba deal with Yahoo, it's just going to put so much money into Yahoo. It's amazing. But that's a ABC up to $50. You're at 42 right now. eBay's up $1.41. You got Transocean's getting absolutely smoked. That was down $1.51. That thing is at 35 going to 28. Big problem. Inside the Dow Industrials, what we have, you had American Express off 78 cents. ExxonMobil. ExxonMobil's in trouble out here also. That's down $1.25. The XLE, if we go take a look at this on the weekly basis rather, we did 10 million shares out here today. Can't hold price. Take a look at this on the weekly. What you have on the weekly is that we did 52 million shares. The B point was 56 million. So you didn't get you broke the B point. You had lighter volume, didn't hold price. Bottom line, you missed it by 4 million. That means that the probability goes down that you get the full price projection. But you know what we have on ExxonMobil, folks? You have another high volume low at 89, so that's where it wants to go. And on a monthly basis, what you're going to see lined up out here is this, is that we're at 95.78, and what just happened is that we just come back inside the range from 2008, and that's a problem in a huge way. Why? We've been outside of this range. You know, we talk about can't bust them up, you want to bust them down? We got outside of that range December of 2013. We just come back inside it. Once you come back inside it, guess what? You got game to the bottom of the range, but more than likely at the highs from the low. No, the highs from the high of the low is where it wants to go first. That's $81. That's a big level on the way down. That's on a technical basis. Fundamentally, I suspect that's going to be about how they planned on growing quite a bit in the Arctic, or at least wanted to grow in the Arctic. And now that deal with Russia is going to basically be off, or is going to not happen for quite a while. We take a look at Big Blue, IBM, which you have with Big Blue out here. She's still having a hard time holding higher price. We're at 191.28, and that has been a consolidation. That consolidation has been going on for basically years right now. You know, IBM is at the exact same spot that it has been back into October of 2011. Now, what that sets up is that this is monster distribution at highs. As we come off the 205 to 210 to 215 level, you had an expansion with higher volume. You've gone sideways on with light volume, dramatically light volume, by the way, too, the last couple of months. That is going to set the next leg up down for Big Blue. And, of course, inside the Dow Industrials, Big Blue is a monster waiting. Apple, for all you Apple fans out here, bottom line, you get another week to live. And what that's all about is that Apple right now closed at 101.66. What that does do is that closed over its high, had lighter volume at 100.72. That means Apple can go higher. So between Apple and Alibaba next week, there's big action. We got our man, Mr. Dave White. He's going to be coming in, growling and prowling with us right now. You stay right there. Dow Industrials finished down 61. NASDAQ off 29. S&P's off 12.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. We start at 8 o'clock in the morning, go to 6 o'clock in the evening. You can get all of that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, you can get Tiger TV, just go to tfnn.com. Right on the top right-hand side, you'll see it playing. And, of course, we got our tech expert at TFNN, also the author of The Tech Insider. And you can get The Tech Insider by coming over to our website at TFNN, going to newsletters, and then going to trading newsletters. And you can test drive that absolutely free.
30 days free.
30 days. And I bet we get a lot of action this week, though, when we're talking phones, right?
Boy, I tell you what, this is the Super Bowl week in the year when you have these iPhone releases of stuff, but you also have a lot of news that gets swept up under the rug because Apple takes all the oxygen out of the room during the week. So a lot of things that are really important get swept aside. But we're going to talk about both the Apple stuff.
Well, you know what's funny is that on the day that Apple was coming out, right, I was in my office listening to your program, and I was cracking up because what Dave was talking about, folks, is that for being in the media, it was a very easy day for the media because you were talking about the wind at their back. You know what I mean? And we know that, by the way, from being in the media. You know, so it is funny that, you know. But and then they started right with Alibaba the next day, though.
Right. There's not a lot of analysis in the media. Most of those guys aren't that tech savvy, right?
They're reading.
So Apple tells them that. They repeat it. They regurgitate it all day long. And it's been till about yesterday, about noon, till maybe today, that we started seeing some thoughtful analysis, besides my show during the week.
Yeah. So I'm looking at two phones here.
Right.
One's 4.7 inches, iPhone 6. And then, what, iPhone 6 Plus?
Right, 5.5 inches.
Okay.
So basically, they now have joined the people that have had full-size phones for the last 2 years from Samsung.
Right.
And one of the things, I talked about it in my newsletter today, but it started with Henry Ford, and he said you could have any color as long as you wanted black, right?
Yeah.
Well, that's great. But at one point, your competitors are going to start making white cars, and you better have white cars when they do, too.
That's right. It's at the beginning of a cycle.
Right.
Beginning of a breakthrough that you can do that.
You can do that. Now, the important part is just ship when things are new. But eventually, it's going to come down to styling and color and size and whether it's got leather seats or not.
Right.
And those things. And Apple, for all the kudos they got this week, should have probably been tarred and feathered a little bit for being so far behind it. Now, Steve Jobs, if anybody's listened to this show a long time, one of the first things I've ever talked about was being at the Condex show and having Steve Jobs behind me and Bill Gates in front of me at the hot dog line at the convention.
Really?
I don't think I've ever told you this.
Oh, this is cool. Yeah.
Bill Gates is in front of me arguing with the lady about the $2.25 hot dog. This is 1986, I imagine.
Okay.
Okay. And behind me is Steve Jobs telling everybody why they will never need a color monitor on a Mac because, of course, they didn't have one, and we're going to have one anytime soon.
Right.
Gates, all he was ever interested in was the money. And Steve was only interested in spinning whatever he could spin to the guy that he was talking behind me. And things have never really changed. There's a lot of more substance when you look at specs and details. And there's a lot of, well, we sell the Iris system. Well, what's that? Well, you don't need to know. You don't need to know the pixels per inch or anything else or how much memory's in the thing. We don't want to tell you that because it might confuse you and you might not buy our product. And that's been Apple's belief from early on.
Okay.
You don't need to be an educated buyer. If you buy a PC, you're asking how much RAM's in it, what do we do with it, what's the resolution?
Apple, you're buying slickness, for sure.
You're buying the sizzle, which they only sell. And
well, you know what cracked me up
PC's
about
more the steak, right?
And when I heard, what happened, folks, is that they were making a big deal of the front camera and all this. And, I had just bought this, the Galaxy.
Right.
And they have all of that. It's like not even, it's.
Well, again, I went through point by point in the newsletter today, so it's good time to take it.
You can test drive the newsletter, folks. Just come over to our website at TFNN, go into newsletters, go into trading newsletters, the Tech Insider right there.
Okay.
30 days free.
So they say, well, we've got an 8-megapixel back-facing camera on ours. Well, the Samsung's got 16-megapixel camera on it.
Right.
Okay. It can do the 4K already. Now, is it important? I don't know because 4K is just getting started, the ultra-high-definition television.
Yeah.
But it does do it.
Right.
Right? And so you can go point by point. There's some things that Apple is better on.
Yeah.
There's some stuff that Samsung's better on. A lot more of the hardware, Samsung's pushing very, very hard on it. Now, what I wanted to do is just be the self-appointed Apple skeptic tonight.
So we're looking at a slide as you're driving in your car, folks, is that it says David White, self-appointed Apple skeptic.
Right.
But you got to remember something, that David White is a Microsoft guy anyway.
It is. But no one's really...
I don't know, but they got to know that.
Yeah, that's fine.
That's all right.
The press has decided, they did a survey, about 80% of the people in the press own an iPhone. Okay. But in the last year, only 15% of the people have been buying iPhones, while 85% of the people have been buying something else.
I see.
So there is this...
Oh, yes. Now, I remember the first show that we did that you were showing, we had a slide up, and this is when Android system came out, folks, is that Apple had like 90-something%, and Android was small,
10,
and then the next
15
one was more and more. Now Android's taken over.
Right. So one of the things, though, is if you live in L.A. or New York City or Chicago, everybo's got an iPhone.
Sure.
So you think everybody across the United States got an iPhone. Well, that's not quite the way it works. A lot of people, when they get out of the big metropolitan hubs, buy Android, and that's why they've got 85% of the market for the last year. But short of Kara Swisher from Recode, who's the only one that even brought up some of the things I'm going to bring up today, and she was fairly mild on it. She basically was just saying, everything that these guys are saying today is a one-day story. What I want to know is the long term.
Yes.
She started bringing up the battery life in the iWatch.
Okay.
if it doesn't last for more than a day, is it a useful?
The iWatch is not going to go.
Well, I mean, I'm really skeptical. Now, you saw it, right?
Yeah.
And we talked about last week about what the guy said about it. I know Switzerland would go out of business, right?
I not only saw it, they were trying to sell me the Samsung watch when I just don't wear a watch. I have beautiful gold watches. I don't wear a watch. Okay, that's you don't need a watch. The last thing time is dynamite, but I don't need a watch.
But what I wanted to get to was the fact that till today, I just started seeing the inklings of actually questioning all the stuff. Right? There's this big press brouhaha, and then suddenly the what I call the Apple teeny hangover is over, and you actually start getting the people that are tearing apart the stuff and figure it out. Now, Apple spent about $800 million and maybe $1 billion on sapphire screens that aren't going to be on these units because they ended up having only about 25% yield in making the sapphire screens. We've been talking about it for a while.
Yeah.
We also saw GT Advanced Technologies go from $18.25 or $18.50 to $12.50 in a couple of days.
Yeah.
Now, no one's saying, hey, where'd you throw that $1 billion away that you spend on this kind of stuff? So we'll get to that when we come back.
But $1 billion is cheap for Apple. I mean, that's pocket money, right?
It's still $1 billion.
I know. You stay right there, folks. Dave White, Tom O'Brien, appreciate you growling and prowling with us. Dow Industrials finished down 61, NASDAQ off 24, S&P's off 12. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. We're talking about the Apple phone, and we're talking about the specs on that phone. I
went through point by point in the newsletter today,
yes,
but I'll give you this. That even with the new iPhone Plus out, it still has a lower pixel per inch than the Samsung Note.
Okay.
And Samsung Note's actually got a next version coming out after Christmas where I think the Apple's 441, it's going to be 600 and something. So the hardware, I don't know if Apple's going to be able to get the kind of, Samsung builds a new phone every 2 weeks, it seems like. Whether we're going to get the ability to go a year and a half or 2 years on an iPhone and have it keep up anymore seems like it's going to be pretty tough.
No, I agree. I think Samsung's way ahead of them. Now, what is this shoving an album down someone's throat?
They had YouTube play for them at the end of the big shindig.
YouTube, Bono, yeah.
Yeah, YouTube. I keep on saying YouTube.
It's YouTube.
YouTube.
Number 2, yeah.
And they gave away an album to everybody.
Okay.
But instead of you clicking to download it, it automatically downloaded it, so it was on everybody's computer on Wednesday, whether they wanted it or not. So people deleted it.
So if you are watching the release, then it comes on your computer. Is that what happened?
If you have iTunes, it downloads.
Period. It just downloads. So now everyone has it, right? Okay.
And then they deleted it, and the next morning it was back again. So they keep shoving it down everybody's throat. It's not a very good album from at least the reviews, and I listened to it a little bit. It's kind of interesting.
Why do you think they did that?
Well, apparently it was a deal to get Bono there to, for the thing.
Okay.
But to me, a lot of this kind of stuff that if anybody...
Look at this interesting, is that one of the Tigers is saying in the den here, folks, this is that he was interrogating, thank you, his daughter last night to see if she absolutely downloaded it, and he's laughing out loud. So that's pretty intense, man.
So normally, if this was Microsoft, you'd hear no end to the amount of calls for the end of the CEO. Apple gets a pretty much a free pass on a lot of stuff.
Yeah, they do.
Now, all this stuff is the negative stuff.
Okay.
I don't think any of this stuff is going to hurt Apple with the people that love them and buy their products.
Yeah.
Now, the one big problem that Apple will have is the prices falling for subscribing to cellular service with data in the United States.
Dave has up a slide right now, folks. If you're driving in a car and you're not watching Tiger TV, it says 4 lines for $100 a month, unlimited talk, text, and data. And it's a T-Mobile ad.
Right.
And that's per month until 2016.
Yes. So it's a pretty sweet deal when most people are getting...
That's 4 phones for $100.
Yeah.
But you have to buy the phones, right?
You can buy a phone for 99 cents.
But I know that. I'm saying you got to buy the phones. So,
right.
Okay.
But here's my thought. Apple charges on these new iPhones, on the standard iPhone,
yes,
the 6, the smaller one, charges the guys about $700. You pay about $200.
Okay.
So there's $500 subsidized.
Yes.
That's great as long as you're charging $75 and $80 a month for most people with 1 or 2 subscriptions,
sure,
1 or 2 phones. The problem is with people like T-Mobile coming out there and offering cheaper and cheaper service,
right,
how long till these phone companies can no longer offer that kind of subsidy? Because people go, well, these guys are $50 a month across the street or $40 a month across the street. And the one thing that could break Apple would be is if you had to pay for it. Because when you buy a new Samsung...
No, I agree.
You buy a new Samsung Galaxy 5.
Yeah.
It's $200. But guess what the phone company pays Samsung?
What?
$496.
But I didn't have to pay anything. I paid... This is what it is. I was telling David, I paid $50 for the Samsung 6. They just called us. A couple of us have iPhones here, too. They called us and said we paid nothing for the 6.
Right. They want to get you locked up now before what I think is lowering prices on the contracts going forward.
Right.
But if you're a cell phone provider, you're $200 better off if someone buys a Samsung Galaxy from you than they do an iPhone.
Okay.
So... the question is, how long are these carriers like AT&T and all that stuff? They want to return customers. But how long before they start sticking the screws to Apple and saying, well, we're not going to do the $299 deal. We're going to do that. Now, Apple always comes back and goes, okay, you don't have to sell our phones at all.
Okay.
Right? And they've got that threat. At one point, that threat will break, and I think that's where you're going to see Apple really start to have problems. And with companies like T-Mobile, I think their business plan is to make it so painful for everybody else in the business with lower prices that eventually someone buys them out.
They want to get taken out.
They want to get taken out.
That makes sense. And that's a great deal for a family. I mean, that's $100.
I know people paying two and a quarter for them
that's
and
normal.
their 2 kids.
Yeah, no, that I would say that's a normal bill. Yeah, which is, it's the amazing thing, thinking about that, how we're so attached to our phones, and that's a bill that we never had before. Okay, the jump to streaming. So what are we looking at here?
Well, 2 big announcements this week. One, the Time Warner CEO is talking about HBO going...
HBO Go service.
Right, going without a subscription at your cable box.
Okay.
So totally streaming, you can watch Game of Thrones without having to download it illegally.
Boardwalk Empire.
Boardwalk Empire. You would have access to all those things without subscribing at your local carrier.
Wow.
Now, that was the first part, but there was a convention on Monday, and both of them spoke. The Verizon guy has come out, and the CEO there, Lowell McAdams, basically said that he's going to have an entire system that includes Fox, ABC, NBC, and CBS, and PBS.
Yeah.
That you'll be able to go for streaming and not have to have a cable subscription either in 2015. So we're probably maybe 12 months or so away from that rolling out, and that means that a lot of these big cable companies are only going to be making money in the future in a declining amount of people watching cable and more people downloading data off of
it totally makes sense,
on their internet. So we've been talking about this for a while. But this is the first time I've heard anybody say, hey, we're going to do it. It's going to happen in the next year.
Because I'm ready to cut this cable.
Yeah.
I mean, I think most of us, the only thing I watch...
CNBC or Bloomberg maybe in the morning or something.
CNBC, Bloomberg or Boardwalk Empire or Breaking Bad.
That's it. There's not that much anymore, and it really, on this week, they finally came out and said, hey, I'm thinking of it seriously on HBO.
Football games. What do you do with football games?
They're doing 100 of them this year.
Right. I can get the football games. Right,
so
exactly.
This year is going to be the test.
Right.
They're going to do 100 of the games. Next year, I suspect you're going to see every game that you want to buy.
Can you imagine, folks, this is what's going to be amazing, is that you imagine the NBC and Fox, how much they paid the NFL, and then the bottom line is that there's going to be a lot of us that are streaming.
Right.
The NFL Network. That is going to be insane.
But it looks certainly like the test this year with 100 games, if that goes well and they figure it all out, works out, that they'll probably every game will be on for pay-to-play next year. So I don't know if it's going to be, like you said, an NFL Network subscription or what, but you're going to pay, and you're going to be able to get it streaming on your device or on your computer or on your whatever your Apple iTV is or whatever device you have. So it is going to look fairly big out there this week.
So a Comcast injection. Comcast is setting up public Wi-Fi hotspots, some of which are run on routers of paying subscribers. Oh, this is a trick.
We talked about that, and I said, what was the problem with it?
Right.
Here's the problem. They are injecting their own JavaScript commercials into whatever you're downloading. So you see a web page. It's not going to be the web page that you saw at home. It's going to be the web page also with an banner ad crammed in on the top.
Really?
But that's not the worst part of it. The problem is if any hacker was able to get into that system, they've got a direct line into it because you have to say okay for the JavaScript. So suddenly they've just compromised your computer. So any one of those nodes that any hacker would get in now has an instant way into your computer. So the big problem isn't that they're being obnoxious, what they are. But the problem is now they've got a JavaScript engine into your system right there, and anybody that wanted to hack your system, it would be fairly trivial to do so at that point.
You know what's amazing is that I guess reading this, we're so susceptible really not understanding it also.
Right.
Because think about something for a second, folks, is that, so they're setting up hotspots, but yet they're using the equipment inside your houses to set up hotspots.
Right.
So the reach is already there. So the 1984 deal is already there, and we just don't realize how intense it actually is there.
I think when we talked maybe a month ago when we started talking about them doing this, was that I said I don't like it at all because if someone could bust through that router, they'd have direct access to my machine. They don't now. It's not. I'm worried about my router. It's everybody that hooks into it's got to be worried about it because who knows what JavaScript injection that some script kiddie out there is going to run on you because it's so easy that a 15-year-old is going to be hacking your computer. That's the difference between really great Russian mobs that, break into the banks and the script kiddies around that are stealing your credit cards that live next door, right? Script kiddies. They write it.
Script kiddies.
They write little scripts. It's not like a real program. It's just like a script, like you type commands on lines. And that'd be it. Like writing DOS commands, right? That's about it. And they can get in your machine.
Pretty
But they're called script kiddies.
You stay right there, folks. Dave and I come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Now, coming next week, folks, okay, over the weekend, check out on the front page of TFNN, Nadex. Why? Because we're going to get you all tuned up next week. Starting on Monday, we're going to do a trading contest. We're going to give away $10,000 in cash. That's $10,000 in cash plus
cash money.
Cash money.
I always wondered what that meant.
Cash money, baby.
I always say it's
so
cash money.
You're going to be able to sign up next week, folks. The sign up will start on Monday. It will go until the following Thursday, and the trading contest, and it's absolutely free. I mean, the bottom line is that you just have to sign up. We'll start the following Monday. So
10 G's.
10 grand, man.
That's 1,000 Benjamins, isn't it?
That's a lot of bread, no doubt. So look at a slide here. It says the Tech Insider, and I'm looking at a great cake. It looks like, is that whipped cream on top of the cake?
No, it isn't. It's a 3D printed top.
A 3D printed top. Okay.
Right. Now,
this would be good for weddings then or something, right?
There's a company called ChefJet.
Yeah.
And they've tried these 3D printing desserts and other things for a while.
Is the whole dessert 3D?
No, just the top of it. We'll show you another picture in a second. But especially the high-end restaurants are looking for additional ways to enhance the presentation of what they have.
Yes.
Today, it's been kind of a low-tech thing, kind of an afterthought. But a couple in their apartment wanted to do this, and they built a business called ChefJet, where they've modified 3D Systems printers to print desserts. And almost perfect, and you can use sugar and other kind of icings and stuff like that. But it's kind of showing you just how far a lot of these different things have come. But when you look at some of these things, they look like Japanese works of art. They can print them so finely now and print them in a variety. I don't know, how would you describe that? Kind of an origami-like thing from Japan?
Yeah.
It looks more like a piece of art than it does a dessert topping, but they're printing these things in 3D for the desserts that night and really work on the kind of presentation for foodies that like going to those restaurants.
And that's a big deal, right? You know?
But we keep seeing this market. I know everybody wants to still buy these 3D printer companies. They're still at the end of their bubble stage. Don't get excited.
It's still going to be commoditized product, right?
Well, partly. But I have a feeling that there's a couple of these companies that have been out and doing some really nice acquisitions. And those acquisitions, like printing in actual steel,
yes,
in titanium and other things like that, are going to find that market. But kind of like you were saying, the iWatch.
Yes.
I don't know why I would want to wear it. There's always a killer, what in the industry they call the killer app.
Yeah.
And Apple wouldn't be here if it wasn't for a spreadsheet program that came out in 1980 for the Apple PC.
Okay.
All the MBAs coming out of college in the 78, 89,
yes,
99, all went out and bought their Apples and started using spreadsheets right off the bat.
So what was that? WordPerfect? What was that?
No, it was, I can look and see the guy's name.
You know what's so crazy when we think about this? So think about this when you go back, folks. There's so many programs that used to buy, and I had computers forever, so we'd pay $450 for like just one type of program now that Google gives you everything for free. I mean, it's amazing.
I can see the guy. He was a hippie, and he'd walked into his accounting class and saw his. I remember seeing the video of
Viscal?
Viscal. That's exactly it.
Thanks, Z.
And
okay.
It is. He walked in and saw them making all these boxes, and then erasing all the boxes every time they changed one number.
Right.
And he went out and wrote it for the Apple, and that's really the Apple sales for probably not the original small box one, but when it first came out, the first 3 months wasn't a big seller. When they came out with
because you got to figure out what to do with it.
Right. The killer app that made Apple, and so that they could make money and they didn't go broke, was VisCalc. And that drove the first year and a half earnings of the actual first usable Apple II out there. And that was the big thing. Now, the same thing is going to happen most likely in this business. It's going to be something that they do. In fact,
in the 3D business. You're saying there's going to be a killer app that's made by someone that all of us are going to want to do it, right?
Just like the first computers really weren't very usable.
Right.
They on a show in Monday, they 3D printed a car in 48 hours. Now, they did one a few months ago, another company did it, but it took like 2 weeks to print it. Okay. Now they're down to 48 hours. Pretty soon they're going to get these things fast. They're really going to get them moving, and people will adopt them on assembly lines and other things. And you're going to really see that first adopter phase of the bell curve start to move up when it goes from those early adopters to the mass market.
And that should bring prices down again. I mean, not just in the 3D market, folks, designing prices down.
You never know which one of these things is really going to take off when you're building something like a 3D printer. Just like Apple didn't, when they built the Apple II, didn't know about VisCalc.
Sure.
And when they built the Mac, they were almost underwater when the desktop publishing program came out.
And that's what they're banging on right now with the watch. I mean, you heard the propaganda. What the propaganda with the watch, folks, is that applications are going to be made. They're going to let the software developers like David let loose on it, and they're hoping that some software is going to come up inside that piece of hardware that's going to change the hardware.
What they didn't show on Tuesday was the killer app for that application.
Exactly.
And that's why most people are a little skeptical on the watch, and a little thin on details on the pay system. So
the pay system's fried. Google, I told you, Google Wallet, folks. Like I have Google Wallet. You don't even use it. I mean, that's all it is. That's all it is. That's not there.
Yeah.
Slow down there, buddy.
Slow it down there, buddy.
Okay, this is a slide we're looking at. AT&T, Verizon have asked the FCC now to change the definition of broadband from 4 megabits
per second to 10 megabits per second.
Okay.
I'm getting 80. So I don't know what these guys think I should go back to. I should live with 4. But the whole net neutrality thing is really starting to spill over. The FCC is now saying that whatever they decide on for net neutrality for broadband systems at home will probably be the same one that they collect on cellular carriers. So they're going to have one set of rules for wireless and for wired systems out there, and that's freaking out a lot of these people, especially Comcast, who's paved K Street in Washington, D.C. with cash for this merger with Time Warner. But at the same time, now they've had more comments over the net neutrality deal than they ever had on anything else. They're approaching 2 times as many comments to the FCC. People like me bombarding them with good things. So the question is going to be really over this next few weeks how that net neutrality system goes down.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want, like, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great weekend. Safe weekend. Dave and I and the rest of TFNN look forward to speaking to you right here next week. Thanks so much, Dave. Appreciate it. Go get them, folks.